performance actually came from Axis Bank. It was a stock that should have been in pain after the company announced more than a doubling, 146% rise in its slippages in the first quarter. But actually, you saw the stock ending in the green. Let's go straight away to Ritu Singh, who has been speaking with the CFO of the bank. Let's cut across to that conversation.
Our watch list of 22,000 odd crores, we said it will resolve itself largely over an 8-quarter period, right? And about 60% of it will likely slip through to NPA. In the first quarter, you've seen about 12% slip through from that original watch list, and that is pretty much according to plan, according to what we had thought was going to happen. Now, as you look forward into Q2, you will continue to see that our original guidance in terms of there being a bias towards the first half of FY17 will hold. Needless to say, it's very difficult for me to actually give an exact number there. But broadly speaking, we do expect that the first 2 quarters of this year are likely to be where the watch list slippage is more, and then it starts slipping more into normal territory.
What I wanted to understand is this 60% that you guided will slip over the next 8 quarters, and the bulk of it will be in the first 2 quarters. We've seen what happened in the first quarter. In the second quarter, can we expect a worsening?
Probably not, though you have to see how individual accounts behave, etc. However, if you just look at the rate at which the slippage happened, and since we are maintaining our 60%, if you just work out the math, it should be clearer that in the second quarter, the slippages that you're likely to see will likely be a little bit more contained. However, we'll have to see as the quarter progresses. It's very early days yet. We'll have to see what the operating environment is and what the clients are going through.
So your watch list, you also added about 315 crores to your watch list. Aside from, there were some slippages. So net, now where does the watch list stand? What is the sectoral distribution? Also, could you highlight a little more on the non-fund based exposures? How much of that slipped in this quarter?
Sure. Your last question and your first question are pretty similar because the answer to one is the answer to the other. The non-fund-based exposure, some of the non-fund-based exposure devolved and became fund-based exposure in this quarter, and that's the roughly 300 crores that you see in terms of increase in watch list. At the end of the quarter, we have about 2,600 crores of non-fund-based exposure, and on a fund-based outstandings, we have about 20,000 crores or 20,900 crores of fund-based outstandings on our watch list. If you compare this to our watch list at March end, right? At that time we were 22,600 crores of watch list. That's now fallen to 20,900. So that's just under a 10% dissolution. The way we are thinking about it is this watch list is an entity that needs to dissolve itself over the course of the next 8 quarters, and hence we have defined this metric that we're calling the dissolution rate, and that dissolution in the first quarter has been just over 10%.
So by the end of FY17, what will the watch list look like, given that you've said you will not add anything to this list now?
That's right. Our intent is to not add anything to the watch list, and for watch list to, for all practical purposes, dissolve itself by the end of 8 quarters. So you can just sort of move from here on. It's hard for me to actually have a clean straight line from here to exactly what's going to happen, because a lot depends on which clients are going to end up being in good shape and which sectors are going to face tougher times. So we'll have to see. It's a guess at this point of time or an educated guess based on what we know right now. I think it's possible.
Okay, so you're saying the watch list could be halved by the end of this fiscal, correct?
I think it's possible, yes.
All right, let's move on from Axis Bank to